real briefly on the psychology part, what has helped me is I started to study a lot of the psychology of trading. And what really, really helped me is to start to think about each trade that I take, I have no control whether that's going to make money or not. On a trade by trade, I have zero control. What
Okay.
I control is to stack the probabilities in my favor so that a bunch of trade collectively give me a win at the end of the day, right? By the, I mean,
Mm-hmm.
by the end of the day, it could be multiple trades a day or multiple trades a week, but at the end of 20 trades, 40 trades, I'm profitable. Because
Okay.
trade by trade, things can go the wrong way. Even if you have the most perfect setup, you can wait for that setup every time and you can go the wrong way. So
Okay.
if you start to think about it that way, then there's no emotion. And I take a trade, whether it works or not, I move on to my next trade.
Oh,
That's one
that's
part about looking at the emotional part. The
okay.
second part is if you're not able to sleep at night with the position on, that means your position size is too big.
Okay.
That's also another problem. So if you can manage these two pieces, which we can go into, at a later date, if we can manage these two pieces, then you're way ahead of most traders.
Okay. I don't think I have a problem with two. My issue is once I get in, I'm like, I guess like I don't know when to exit. Like if I see a green, I should just exit. I just always think like, oh, this play might just reach like 100% or 200%, and or sometimes I get out too early and then it goes up, and
Yes.
then at that at one point I'm like, ah, whatever.
We all feel that. Uh,
Yeah.
for that piece, my own rule is if I see green that I'm happy with, I'm out. Right?
Okay.
It doesn't have to reach a certain percentage. And but the second rule to that rule is I'm not gonna look back to my exit. I will not second guess that exit and say, well, I should have stayed because I don't know.
Okay. I tend to do that a lot. I go back to see what it was, and then I'm like, crap.
You
Yeah.
only go back for one purpose, and that is you have to journal your trades. You go back to see could I make improvements, not to say crap, but what? Why did I exit early? Was it fear? Was it greed? Was it not having a plan ahead of time? That's why you go back to analyze. You have to journal every trade.
Okay.
As you analyze, then you say, okay, now I see why I'm exiting too early. Or a lot of times is I see why I'm exiting too late. Because you have a winner, you let it fall.
Yeah.
Yes. Right. So both
Okay.
of those sides can happen. So it's very important to address that.
Okay. I never thought about it like that way, so that kind of helps. Thank
Yeah.
you.
Yeah, you're welcome. Okay. So you're the first one who said today, I'm in, I'm coming.
Yes, that was
Yes.
me.
Yes.
Yeah,
Very good.
because I was like, I don't know what strat is. Like I mentioned before, I don't know how to read the candles. That's another thing. Like I enter the alerts kind of blindly, and I kind of want to stop that. I really want to learn the correct way of like why you guys really called out a play, or like, well, not your team. I've been in other Discord groups, and since then I've left a few because I just really wasn't grasping anything. And there weren't like these little like tutorials or webinars or whatnot.
Yeah.
So that's why I was like the first one. I was like, I'm in.
Okay. Okay. Good.
Yeah.
So let's dive into charts and how I view charts. And anyone, please feel free to stop me anytime to ask questions. Greg, uh, Black Ops, I know you guys have been here for a while, so even if you have questions, feel free to stop me. Today I'm going to really focus it more on newbies, and so I'm sure there's a lot you will learn, and there's also a lot that you can contribute. So don't feel shy to contribute as well. So as we think about how do we read charts. What does a chart mean? What is a chart telling us? That's the first thing that we really have to think about. And what a chart is saying is in any given moment, are there more buyers or are there more sellers? Really, that's what the chart is in a very simple term. Each bar represents a moment, and that moment has a starting and ending point. It could be, if it's a monthly bar, for example, it's first of the month until the end of the month. That's what that whole candle represents. If it's a 1 minute bar, it just represents 1 minute out of the trading day. So, but no, irrespective of the time frame, what each bar is saying is who is winning that war at that time frame. Is it buyers or is it sellers? When buyers win, price goes up. When sellers win, price goes down. When nobody wins, price stays flat. And we will see a lot of those cases as well. You hardly see that kind of a case on a monthly basis, but you do once in a while. If you're looking at my chart right now, if you look at the May bar, it opened and closed at the same spot, meaning, sellers try to push it up, but buyers brought it back up, but buyers did not manage to push it much further up. So where it opened, it closed. You'll see this as nobody is winning the price war, but on a monthly chart, it's rare that you would see this because 30 days is a lot of days for price movement. 1 minute bar, 5 minute bar, even 1 hour bar, you'll see a lot of these indecisions. So if you can put this in your mind, bars can only do one or three things. They can either go up, go down, and do nothing. So these are the only three things that they do. And the strat is really focused on this concept. And before I go into the strat, though, I think it's good to understand overall what the charts are telling us, right? What does it mean as the charts are going up? Hey, Candlestick Money, welcome.
Hello, hello.
Feel free to ask questions as we go along, just to let you know, but we've started already.
Okay.
All right. And so as you look at every chart, what is price doing? You look left to right, is price going up left, right? Meaning currently we're higher than we were, a few months ago, a few days ago. Is price doing that, or is price going down, or is price staying flat? When we talk about consolidation, it means price is not going up or price is not going down. It's staying in a tight range, consolidating, trying to decide which way it wants to go. So, in a nutshell, this is what charts is all about. So what it really comes down to is once you understand this concept, is how do you figure out which way the market is going next? Right? We see the past, but which direction is it going? And what I teach is I don't want to predict the future. I just want to anticipate based on various criteria that I have for my style of trading. And based on that criteria, I anticipate the move and I enter my position according to my anticipation. And, Liz, I mentioned this earlier. I said on a trade by trade, I have no control which way it's going to go. So I'm not married to that trade. I will either let it expire worthless in case of an option or exit at some predetermined level. And I don't care what that does. Emotionally, I'm not tied to it. What I want to do is be successful over a period of time. So I start any chart that I want to look at. And I want to encourage you as you're studying charts, just pick one. You don't have to say, can I find the Tesla, the Amazon, the Netflix, the Nvidia, the Microsoft, the Apple? You don't have to do that. Just pick one, and I suggest you pick the SPY. The SPY moves a lot per day. It's very liquid. It's the most liquid. Very easy to get in and out. Very tight spreads. So just, if you can just pick one and study that chart until you fully understand, oh, now I know what the chart is doing, right? You can freely say, like when I mention in Discord, when I say, hey, I see this happening and I'm entering this position because of that, is because I'm anticipating. And a lot of times you see those anticipations pan out because there's a reason why we get into a position, because we understand the charts. We're not getting into a position blindly or guessing or predicting like, oh, yeah, there's some good news that's going to come out tomorrow, and I think the market is going to do this. I just let the charts tell me what to do. So my starting point is always the monthly chart. You can even go higher. For me, I start at the monthly. And at the monthly, I look at the last few months. What is the trend? Which way is the market heading? And what I see is in this area here, in this boxed area, price was really not going up or not going down. It was consolidating in this area. When you're looking at the monthly, it's a big range. When you go down to the daily or hourly, it's a big range. But from a monthly perspective, price was consolidating in this area until it broke out of that area. And once it broke out, it just kept pushing up, pushing up, pushing up, and now we are in a correction, in a pullback, and we will decide how to look at that as we move forward with our session today. So the monthly, this is what it's telling me. Recently, it's in a strong uptrend. It has broken that uptrend. And to help with uptrends, you can draw trend lines, uh, horizontal support resistance lines, which I'm just mentioning now, but we'll get into that in just a little bit. So once we understand which way the market is going on the monthly basis, then we'll see we go down to the weekly. Now, because the weekly gives us a little bit more granularity as to what that monthly bar is doing. And in this weekly, I see, oh, okay, we are forming a lower high. The highs are not continuing, so we're forming a lower high. Therefore, this is a cautious area for me. Is price going to continue to go down, or is it going to reverse to go back up? It just gives me that indication. And just real quick, that just remind me, there's this idea of structure and area of value. Structure means what is price doing? That is what structure means. So that's what structure means. So in this first part, price is going up. Price is going up because it's making higher highs, it's making higher lows. What that means is as price is driving up and it pulls back, it never goes back down to the previous low. That's what higher low means. And as it drives higher, it's breaking the highs and just keeps going higher and higher. And what we do is try to find moments where price swings so that we can take advantage of them. So area of value means these swing areas. Where is price likely to reverse course so that I can enter a position? Right? These are areas of value. And what I say by where does it reverse course so I can take position, one thing I try not to teach, especially newbies, one thing I try not to teach is just because I see a high formed here and then another high formed here, I don't recommend you take a short position or a put, because the structure in this part is still up. I always say follow the big trend. So if the monthly is up, the weekly is up, the daily is up, and if you're entering on an hourly, only look for the up positions. So those up positions will come here when price pulls back here, price pulls back here, and price pulls back here. Everywhere else will be chasing. Even as long as it's going on the way up, you don't know when it's about to turn, so that's chasing. You buy up here is chasing. Think of it this way: if you bought up here and price just keeps going down, that's a wrong idea of purchasing, right? That's what's called chasing. You want to find an area of value where price comes, find some level of support or resistance for you to enter your position. So I just wanted to give you this drawing so that it makes sense now as I speak what I'm referring to, right? When I say structure, I'm talking about price. Is price continuing to make higher highs, or is price continuing to make lower highs, or is price doing nothing, right? The highs are not higher, the lows are not lower, so it's consolidating. It's important to understand all of that as we are reading the charts. This is where, when we go to the strat, all of this will start to come into that same picture, because what the strat tells you is a bar going up, down? Is it breaking the previous day or high, or is it breaking the previous day low? Is it breaking both sides, or is it breaking neither side? But if you understand structure, what each bar represents, and don't worry about the my colors or hollow and solid bars, because I do reverse of what most people do. So don't think about that. For me, an up bar is full, a down bar is empty. So don't fixate on the hollow or fullness of the bar. Just focus on the concept. So once I know the monthly was up, the weekly is still up, but I see a weakness in the weekly. I see some weakness. Then I go to the daily, and that weakness is really magnified in this daily. Right? You can really see now, day by day, okay, we broke the trend line. We did a small rally. We came back. We tested that area again, and then we came back. So that's where we're playing. I see that we are making a higher low here. So I know price has a tendency to continue higher until this concept is broken, right? Until things are broken, we just keep assuming that price is respecting what price is doing. A lot of the stuff that I look at is just price action. You don't need anything more than price to tell you what price is doing. Indicators, in my charts, you rarely see them. If you use them, they should be there to support your narrative, but not to write the narrative. That's how I use them. If price is telling you, because for me, price is king. If price is telling you what it's doing, and you add in a moving average, a VWAP, or anything else, that should confirm what you are thinking, and you use it accordingly. So now we know on the monthly uptrend, but the monthly has shown that it broke the trend line. The weekly has shown it. The daily has really magnified that position, because if you look at the monthly, you can hardly see. You might even think, oh, there's nothing wrong with this trend because it's one big bar covering 30 days. So that's why going to that weekly said, okay, I see what that 30-day means. Go to the daily. I can see now what those few weeks mean. You can really see this. And if all you can do is take a look at charts once a day at the end of the day, then your analysis stops here. At the end of the day, there's no more action for you because you're not able to trade any lower time frame. But if throughout the day you have an opportunity to look at the chart a couple of minutes at the bottom of every hour, because a 1 hour candle bar closes at the bottom of the hour, then you go down to the 1 hour chart for an entry trigger. The concept, nothing changes, right? It's just more bars, more bars. When we broke this trend line and price said, oh, okay, I'm heading down from here, lower high, lower high, lower high. But from this low, now we start to make higher low. Now we started to see, okay, I'm going back up. I'm going back up, but then it is struggling in this area. This is where you start drawing support and resistance. Support and resistance means where has price had difficulty to break through to go down or to break through to go up. The more touches, the stronger that resistance or support. And resistance becomes support. So it was support here, price in 4 hours could not break through. For a few days it stayed above. Then for a couple of hours, for one day, 2 days, it stayed around that support area. And support is a zone, it's not a one precise line, it's somewhere in that vicinity. It struggled for a couple of days and then it broke through. Now, the next time we come back here, that becomes resistance. So when we talk about don't chase, when I drew this and I said at the top here, don't chase here, it's also the same idea when we come back to that level that acts as resistance, you also do not chase here. Right? This is also not a good place to enter a position unless you have very specific strategy, break of resistance, break of support. That starts to get a little bit more advanced. So I don't want to clutter today's conversation, but the idea is do not enter a position when you're coming to a resistance or a support. So up here, if you've taken a position down here, it's a good place to think about exiting, right? Liz, you mentioned sometimes you don't know where to exit. This is where these ideas come into the picture. Once you identify an area of support and resistance, even down here, you might say, oh, okay, I'm going to exit here. It's okay if I miss this part because I have a plan and I'm exiting based on my plan. That should make you feel comfortable, even if price goes to the moon after that, because there's always an opportunity to get back in, but never an opportunity to recover lost money, right? For at that particular trade. So if you give back your profits, that opportunity might be gone. And if you didn't take profit up here and price is down here, that opportunity might be gone. Right? So it's always a good idea to say, okay, where is an area of value where price could potentially exit? I find that point and I exit there because price could stall, right? As we see, the first one it stalled for a few hours, broke through. The second one, it did not manage to break through. Even a few days later, it was exactly a week later, it went back there and said, I'm not done in this area, I can't break through. So this is how support resistance really help you understand where you should enter and where you should exit. Right? They give you that idea. If you understand we're in a downtrend and you come to resistance, you say, oh, this is resistance. I see a couple of other indications. I'm willing to go to the downside. That's fine. Right? This is not chasing when you're going to the downside. Chasing is if you want to continue this upward trend would be chasing, but going down is a new trend for that temporary rally. We're resuming because here we're in a downtrend. We have a temporary rally and we could go back down, right? This is an opportunity for that position. So let me pause. I've said a lot, so let me pause and see if there are any questions or any thoughts, feedback.
Yeah, can you go over how to draw the broadening formations for intraday trading?
Sure, I'll do that. Uh, Before I go into that, are there any more basic questions?
Not at the moment, but it's kind of making sense little by little now.
Yeah, okay. Yeah, it's going to take you time. Don't worry
Yeah,
about how long it takes.
right.
Just be encouraged to come ask the questions. Right,
Okay.
my door is open. Just ask the questions, and I will answer them as much as I can.
Okay, thank you.
Yeah. All right. So broadening formation. What he's referring to as broadening formation is more in lines of the strat trading, and actually, this month we had a very, very good example of that. Very good example of that. So when price makes a low, pushes up, the next bar breaks below that low, but instead of continuing down, it reverses. That's your broadening formation. What broadening formation really is the charts going in two directions at the same time, right? It's making higher highs and lower lows at the same time. That's what broadening formation is. And usually when you see this, it's when price has a tendency to test both ends. It tests here, it comes back, it tests here, it comes back, right? It has a tendency of doing this. This is why we have this broadening formation. And I talked about area of value. So area of value would be, I want to wait when price comes back here if I want to go long, or I want to wait for price to come here if I want to go short. That's the area of value. Yes, on a minute bar, on a 5 minute bar, you can find opportunities in between. But what I subscribe to is I want to follow the trend of the bigger time frame. And bigger time frame means 5 times above your entry time frame. So if you're entering the 1 minute chart, the next bigger time frame is the 5 minutes. And then I multiply that 5 by again another 5. So 25 minutes, roughly 30 minutes. So if you're doing 1 minute, it's 1 minute, 5 minutes, 30 minutes. And the 1 minute entry should be in the same direction as the 5 minutes and the 30 minutes. When those two are aligned in direction, then the 1 minute chart is good to enter. Uh, as long as the 5 minutes is up, you're looking for the 1 minute to have a pullback so that you can enter at that area of value. So this is what that broadening formation is really all about. And so as we saw, and I've drawn this already, this the one side is drawn here, and the other side is here. Right? You see this, you can see. So here's one side of that megaphone, here's the other side of that megaphone. And usually it happens, like I said, if you zoom out, this bar here, October low, in January, we broke the October low momentarily and we immediately reversed. We immediately reversed. And when you go to the daily, you'll see here was the October low. And then in one day, on January 24th, we broke that low. We were trapped. If people who trade break off support resistance, earlier I mentioned you have to really have a plan for that. People who thought, oh, okay, price is going down, I'm going to enter down here, but they really got whooped because price immediately reversed. And the reason I'm marking this, I want you to see it when we're going to lower time frames. because in one day you won't be able to see in action. But here on the 24th, we gapped down. I believe I mentioned it in Discord. Watch out for manipulation because we're at an area of value here. So we gapped down at 8:30, 2 hours after trading open. It triggered short. People who thought, oh, now it's short, I'm going in. The very next hour, price reverse, never saw that point again. Right? That's why it's critical. If you're a breakout trader, you have to wait for some confirmation. For me, a breakout trader means I break support, I test it, and then I continue to go down. That's what confirmation means to me. I don't enter at the first break. I enter when it fails to close above that line. So as we saw, price came down here, tested it, and boom, it went. And the other side also got trapped here because when it opened, I can erase the line here. As you can see, the low of the opening hour touched this line. So the bullish people can say, hey, it just touched and reversed, so I'm going to enter because it closed higher. I am entering a position here. And 99% of the time, their stop is right below this support somewhere here. So when this short triggered, it triggered for a while because there was more selling pressure from their positions stopping out, but then immediately reversed, and then the shorts stopping out fuels that buying, and boom, gone. So when you have broadening formation, that's what it's about. Broadening formation is about I have a low that I have identified, I'm breaking that low momentarily, and boom, reverse, done. Does that make sense, Greg?
Yes.
Good.
Yep.
Uh,
What do
so
the numbers mean on those 1, 2, and 3? I think.
uh, this is a strat, and so strat. This I coded these myself, so they might not look the same in everybody's charts, but basically it's the same thing. The strat has three scenarios. A bar can stay inside the previous bar, so it doesn't break the high of the previous bar or it doesn't break the low of the previous bar. That's called a scenario 1. As you can see, this one here on November 8th, it did not go above the November 1st, this is a weekly high, or it did not go below the November 1st weekly low. So that's a 1. A 2, scenario 2, it's when a bar breaks only one side of the previous bar. If it breaks the high, it's called a 2 up. If it breaks the low, it's a 2 down. For me, instead of seeing on the chart each bar, did it break the low or the high, I'm lazy, so I just put a red 2 at the top. It just says, this is a 2 down. If it's a blue at the bottom, then it's a 2 up. That's what I have done for myself, just to my cheat sheets, right? Just to tell me which way it's going, because it could be confusing, right? It's an up bar. An up bar can still be a 2 down. Like this week here was an up week by itself, but it didn't break the high of the previous week. It broke the low, but it didn't break the high of the previous week. A 3 means it broke both sides of the previous bar. It broke the high and the low. It doesn't matter which side it breaks first. It breaks one side, right? It could start as a 2 down and become a 2 up, so that together, 2 down, 2 up together makes a 3. And again, I mark it as red for me, meaning it started to be a 2 up and finished being a 2 down. If it's a blue, it started as being a 2 down, finished being a 2 up. So that's just how I color coded for easy reference. So those are
Okay.
only the three scenarios, but one of them, a 2, has this possibility of either a 2 up or a 2 down in the strat trading. And from there are uh, buying opportunities, right? There are how do you pull the trigger uh, opportunities. Those conditions, they have their own conditions that we can go into later. I think for now it's just
Okay.
good to understand the concept, right? What are charts telling me,
Yeah.
and then from there we can move into uh, strategies and different things. And charts can be drawn in many ways, right? You can have a bar chart, and charts have four things. They have an open, a high, a low, and a close. So in a bar chart, the open is on the left side, the close is on the right side. That's how you easily know whether it's up or down. In a candle chart, it's a little bit trickier. You just have to, if it's a green bar, you just know the close is higher. If it's a red bar, the close is lower. I use red and green as a reference because most charts, if you're starting out, if you haven't played around with colors, most charts are red and green. So red means down bar, green means up bar. And so in a candlestick, the open is higher than the close, then it's a down bar. The open is lower than the close, and it's an up bar. Then there are different kind of charts you can go into. You can have a line that is solely based on the close of each bar. Uh, I don't usually play with lines, but you can play with the lines and decide. I think you can go in here. Let me not try to teach you what I have not done myself, but you can go into line and say, is it based on the close, the high, or the low? There's a setting you can do that. And there are various other charts. I just find it easy for me. I like candlesticks that, and I have candlestick patterns to my left on my wall that I have a big poster, so I just prefer to use candlesticks.
Okay. Thank you.
Yeah. All right. So I think there was a lot of information today uh, that, go back, listen to it multiple times, and then let's ask those questions. Uh, all right. Any other strat questions? I think there were some strat questions in Discord. Maybe we can touch on those.
Yeah, I'm just wondering. Sometimes I see some strat scripts where they just have the one and the three
Yeah.
versus the one, two, and a three. What's that about?
So let me find a, an image. Just give me a moment. Let me find an image to explain how that works, because I think it would be helpful once we have that.
Because because for your entries, you're looking for twos up or twos down to enter, correct?
Yeah, yeah.
Okay.
This shows you what are some of the conditions you're entering a trade, right? And there's entry conditions. There's a term that they use. The term has just escaped me. Uh, if anyone remembers it, shout it out, please. But so 212, 212, 312, or pivot machine gun, PMG, or the one bar reversal. So this is the 1-3 you're talking about. I have never seen a 1-2. I think a 1-2 is a little uh, dangerous without context. Right? You can have a 2-1-2, but if this is a 1, like if it's a 1-1-2, it might be a little dangerous. But you could have a 1-3. What a 1-3 says is if I have started for example, for bullish, if I started as a 2 down and immediately as price goes up and goes halfway of that 1 bar, I enter targeting the high of that 1 bar. That is the 1 bar ref strat. Or the other way around uh, for bearish position. Otherwise, you have a 2-1-2. So when you have a 2 followed by a 1, you break the 1, you take it targeting the high of the 2. If you're doing this on a daily bar, then it's the high of that 2 days back high. If you're doing it on the hourly bar, it's 2 hours ago. So every time frame, you can still do this. Every time frame. Does that answer your question?
Um, yeah, I get that, but I was just wondering because they don't even have the twos on their chart at all. Like you can't even see them. The only thing that's displayed on their script is the 1 and the 3 only,
So who's
excluding
they?
the 2.
So who are they?
So Vert,
I've just seen it.
so when someone has a 1 and a 3, it's just that they don't like to have twos on the chart because it gets to be a lot when you have too many twos. So
Oh,
I have a 1 and a 3. So every other bar, if it's red, it's a 2 down. If it's green, it's a 2 up.
Aha, but that's not a true statement. It could be a red and still be a 2 up. I just showed you an example of a green that's a 2 down right here. It broke the previous week low, so that's automatically a 2 down, but it's a green bar.
Are you speaking on the purple one? That's
Yes,
green. Okay,
yes,
that's green for you.
yes. So a 2 down only says you broke the low of the previous bar. It doesn't say which direction that bar finishes. It could be a bullish bar or it could be a bearish bar. A 2 down only says I broke the low of the previous bar. And the 2 up only says I broke the high of
Okay.
the previous bar.
Yes, I
Right here,
guess I
another
think.
example right here. This is uh, a 2 down. Now, this is not a good example, so I'll find another example where a bearish bar is a 2 up. Right here, right here. This bar is a 2 up, but it's a bearish bar. So it's not the color of the bar, it's which side of the high or low that it broke.
Yeah, so I think for every bars that usually breaks on the bottom, I take it as a 2 down and it's red, but you say the color doesn't matter. But when it breaks on top of it, I take it as a 2 up.
Yes, yes. That's why
So
for
just
me, I like to put the
reduces the clutter.
numbers. Yeah, I like to put the numbers top or bottom so that I can easily see. Ah, okay, this is 2 down, 3 to the downside, 2 down, 2 down, 2 down, 2 up, 2 down, 2 down. Right? But yeah, but you're right. So some people might remove the twos if they feel comfortable, but their entry is on based on this, right? It's based on this, and they're talking about full time frame continuity. It's the same thing that I mentioned earlier. You want your 5 times greater and your 25 times greater time frames to align with your entry time frame. Right? Once you have that, then you take an entry. That's what they mean by full time frame continuity. All time frames are aligned. Monthly, weekly, daily, or green. You want a red hourly so that you can take a 2-1-2, a 3-1-2 entry, right? That's the purpose. What else?
So when you're charting, you just chart with the strat. You don't use any other indicators like I've seen on YouTube videos, like the RSI, the what is
MCAD,
MCAD,
MACD.
MCAD. Yeah, yeah.
Yeah. So
I mean, I don't know them all, but yeah.
uh, my opinion, you
Yep.
don't need to know any of them.
Okay.
That's my opinion. Because I prefer to trade without indicators. I do use some for my just for me. It's just to add to my confirmation. Like uh, this is an oscillator. This is my own oscillator that tells me if there is what I want to know in my oscillator is not really an entry, but what I want to see is when price is making a higher high, is my oscillator following suit or is it doing something different? That's what I want to see. When it's doing something different, it tells me, okay, it might be time to start thinking of tightening stops, getting out of long positions, and maybe consider short positions. That's what I use it for, but nothing else. Because a lot of people say, oh, when your RSI is above 70, it's oversold and you should sell. You can stay at the RSI above 70 for months and you'll be clobbered if you just follow that strategy. So that's why I don't like indicators. And also, indicators are always lagging. They always tell you after the fact. Price tells you right now.
What's that all the way at the bottom? That's the Strat FTFC. That's the
Full
full
time frame
time.
continuity.
Okay, and what does
That what
like
that
what does
means
that?
is your monthly, your weekly, your daily, and your trigger charts are all going in the same direction.
Okay.
That's what full time frame continuity means. And for me, I I like to be lazy in my trades. If I have this right here,
Hmm.
immediately without having to look at multiple charts, I'm in the hourly. I already know the monthly is an inside bar, the weekly is a two down, the daily is a two up. I already know. So I don't have to go to those charts. So when
Okay,
all these three line up, like when all these three are green, I can go long. When all these three are red, I can go short.
I see. Okay.
Yeah. Yeah. And these numbers, you can ignore these numbers because they mean nothing. It's just for me to be able to separate each line wide enough so when I plot it, it makes it easier.
Got it.
Any other question for today? Any feedback? Was the level too high, uh, confusing, or just right?
Well, for me, it's still a little confusing since it's my first time, but it kind of makes sense little by little. And like you said, it's gonna take me a minute to kind of learn this because this is brand new to me.
Okay.
But you made it, to me, you made it sound like really more simple than the other video that I tried watching. That was more confusing. I was like, I need to watch that video again.
Okay, good.
Yeah.
That's my goal. Is because I have done this for a long time, right? My challenge is how do I make it low enough so people can understand? So that's why your feedback is good for me.
Yeah.
I think we're good for today. If you all just think about your other questions, let's address them in Discord or next time we meet.
So thank you for your time and thank you for teaching this.
Of
And
course.
I'm new to your Discord group. This was really helpful.
Very good. Yeah,
Yeah.
just keep coming back. We'll just
Oh yeah,
give
I am.
you everything that we know.
Okay. Awesome. Thank you.
Thank you, man.
Good night, guys.
Thank you. Good night.
Yeah.